Now, we understand that price moves like this, zigzag, and let's assume this is our moving average level. And we are looking to join the trend. We're looking to join the trend, and price gets to our moving average level. From this, now, this is the moving average level. When price gets to this point, oh, price drops. Now, when price gets to this particular moving average level zone here, and we have price breaking out from this level, instead of it to do what others are doing by dropping price, or price did something like this. Price did something like this. It went up, touched the moving average, then come down to this place, then bounce back up. There is a reason why it happened here like that, and that is why I took my entry. And that is what I will talk about, what the average bar. The average bar that acts at what? A support or a resistance zone. Now, this is it. Let me explain fully. Now, when price, the average bar is just a particular bar that touches the moving average first. For example, if you are buying, then the average, if you want to sell, for example, you want to, let me just buy, you want to buy, for example, and our moving average is up here, then price come down here and form this, then form a particular candle like this at that moving average level. This particular candle automatically becomes our what? Our average rejection bar. And what is the essence of this average rejection bar? It's the particular bar that forms the market structure in this level that will make price go back up. It is this particular average bar that will make price form a market structure around this level and go back up without price coming to the close of this particular, coming close to this particular low. Are we getting it? Hello, are we there? Are we getting what I'm saying?
Yes.
I need somebody to respond. Naomi, can you get me? Who can hear me?
Yeah,
Are you
we can
understanding
hear
what I'm
you.
all right?
I hear you.
All right. So
Yeah.
the average rejection bar is the one, that particular bar that causes price to maintain the runoff. I call it a runoff. For example, you saw price, this is the moving average, and you saw price trending lower. Now, in getting to the moving average is supposed to act as a resistance zone to make price push down. But no, what is it doing? Instead of acting as a resistance, it now acted as a what? A resistance, then turned to support, then move up. This particular reason why price from this first wave up, drop down here, then go back up is as a result of the average bar that is here. And I said it is that particular bar that touches the moving average, first of all. Now, let me share my screen. Now, this is my screen. Now, if you look at this particular bar here, price touches the moving average, right?
Yep.
Okay, let me just go straight to my entries from the 4 hours. Good. Now, my entry was from this point. The 4 hours never load. Let me restart this. I'm trying to restart my chart so the 4 hour can load, because my entry was on the 4 hour. And why is it the 4 hour? It is the 4 hour because it was the 4 hour time frame moving average that was holding price at that point. Look at it. It was the one holding price. It was the price was respecting the 4 hour moving average. Now I'm going to explain one thing for us. The essence of this, remember, look at it, look at the this thing I drew the last time. Price drop, form a consolidation here, then drop. On a normal, it's supposed to respect the moving average and go back up. But want to know the reason why it drops here to this point. Can anybody guess why do you think price dropped to this point instead of going back up? Instead of this place holding price, but instead price dropped down more. Why do you think so? Anybody want to try? So tell me why.
Well, I think the reason is that there was no cost structure to the upside
There was no what?
on 30 minutes.
There was
No
no
break of structure
to the upside
on
in
30
minutes. God bless you. God bless you, engineer. I love the way you answered with the break of structure. That means you are following. You are really following what I'm doing. Now, there is no break of structure in the 30 minutes. I love that. And that was why my entry was on the 30 minutes. But now, what I want you to understand is when price formed this particular level, let's say, now this particular drop you are seeing here, this drop you are seeing here started from the 1 hour time frame. Now, when it started from 1 hour, it drops down to the 4 hour time frame level. Now, in touching the 4 hour time frame level, we are expecting price to go back up. But because, first of all, we need to see a break in the market structure from the 4 hour, because according to the 4 hour, the average rules I told you people, once price is touching the moving average in 4 hours, then you want to make use of your 30 minutes, the normal sequence. But when price goes below it, then you now enter the TPTZ zone. You will now enter the TPTZ zone. That is what I told us when if you watch the moving average video, the TPTZ zone. But this one, price is still stalling around the 30 minutes time frame. And that was why I looked at it. Look at what you do now. The first particular bar that touches the moving average, that bar is our rejection bar. And what is that bar? This is the particular bar here. This particular bar that touches the moving average. This one. This is the bar. So this bar now, what is the essence? I will take the high of this bar and the low. This is now the range where I expect price to move, to form the structure, then decide to either go up or come down. But because of the volatility in this particular bar, price decided to do what? Range lower. And how did it range lower? I will show you. It respected the 30 minutes time frame market structure. So what did I do? I will have to come down to the 30 minutes time frame market structure because I know that it is touching the 4 hour moving average. The next thing is what? 4 hour is respecting the 30 minutes. So I have already switched my sequence now to what? 30 minutes. Why? Because it is touching the 4 hour moving average. So 4 hour is what? 30 minutes. And that is why we have this. That was why, if you agree with me, we saw something like this. Something like this. This is it. Look at the 4 hour market, the 30 minutes market structure. Look at it. Price drops, form up, market structure, drop down again. This is now a market structure zone. Went above it. It did not break. It came back down. Try, close again, market structure. Still is our market structure level. Now, price did not close below our market, above our market structure level. But instead, it now drops. It drops. Now, the reason we want to check is why did we have this drop? Like I said, it was touching the 4 hour moving average. I will now come down to the 30 minutes. Since it's touching the 4 hour, I will come down to the 30 minutes moving average. Look for the 30 minutes market structure level. Listen, I will go down to the 30 minutes. That means the primary time frame of 4 hours. I will look for the what? The 30 minutes time frame market structure level. Now, when I look at the 30 minutes time frame market structure level, the next thing I will now do is what? I will now wait for them to show me their hand here. 5 minutes. Let's go down to 5 minutes time frame. You will see something. This is the level. This is it. From the 5 minutes time frame. Yeah. Now this one is very, very, very fast because of the formation of what? This particular bullish move is so quick. And so the ABC pattern, the divergence and the rest was not clear around this 5 minutes time frame. It was not even clear. Sure, there is no market structure level around that place. But what happened? There's a particular candle bar that I spotted, volume bar that I spotted that made me took the trade. I will explain that later. But it was that particular bar that made me took the trade on Euro USD, and I entered based on that particular reason. And the second thing is this. When I entered this trade, now I said something in the last class that I will talk about my stop loss and the rest. When I entered this trade, listen attentively to this. When I entered this trade, yeah, my stop loss was not price level. If I'm to use a stop loss, this will be my next stop loss. This particular moving average, this particular market structure will be my next stop loss. But that is not my stop loss. The reason why I took this trade was time stop loss. I made use of time stop loss in the sense that I will keep on holding this trade for the next 4 hours in as much as price did not break this market structure completely. Because if it breaks it completely, then I know that what they will change their hand and go up. But since I made use of time market structure as my, I made use of time rather as my stop loss, what I was waiting for is what? A close above this particular point. Above this particular 4 hours. Above this particular 4 hours at the end of this particular 4 hour level at the end of 4 hours. So I will confirm this 30 minutes break in structure. This 30 minutes break in structure rather. This is it. This 30 minutes break. So assuming price breaks this level at the end of 4 hours, if you look at it, let me make it bold. There was no break. So I kept on holding it for 4 hours, and that is why price dropped. That was the reason why I took the trade. Now, the next thing I want us to understand is this. This is the only reason why I took the trade on this average bar. So we are going to see more example. We are going to see more example based on this particular reason, average bar. Yeah, that is service actually. We are going to see more example as regard this. We are going to see more example. Now let's keep on checking. Let's go look for another example. Now, this is the daily time frame. Now, engineer, let's talk about this. Look at this particular point. Everybody will contribute to this. Let's take this place, for example, this particular point. Yeah. Yeah, this is the daily time frame. This particular point, yeah. This particular point, yeah. Then we will round up for today. Now, let's look at this. The first one. Engineer, you go first. Then Naomi will go second. Then Chidebere will go third. Then I guess Ayotunde. Ayotunde, are you there? Okay, we are just 4. Engineer, you go first. Victor goes second. Naomi goes second, and Victor will go last. I want to see if people understand what we just finished talking about. Now, this is it. Engineer, this is your first boss. This is the boss you want to look at. And price drops.
Yes.
Price drops from this top. Price dropped from this top. Came down to touch the daily moving average. What will you do at this point?
Yeah, at that point,
Yes.
I will make it and go to 15 minutes
15 minutes. Why 15
to
minutes?
check. Yes. Because we are dealing with daily.
Good. But
The
now,
15 minutes will
not 15
be the
minutes.
primary time frame.
The primary time frame is 1 hour, not 15 minutes.
Oh, sorry, it's 1 hour.
Are you
Sorry,
there?
I'm sorry.
Yeah. Your primary time frame is 1 hour,
Yes.
not 15 minutes. So we'll
It's
go
1
to
hour.
1 hour, right? We come down to 1
Yeah,
hour.
yeah.
This is the level here
Yes,
in
sir.
1 hour.
Yes.
This is the level in 1 hour. Now, what will you do again? This is 1 hour.
Yeah.
What will you do?
We check if the 1 hour
Structure.
market structure is broken,
Okay.
and there is no break of it up. Rather, we have a break of the structure to the downside.
All right. Now we have the break. This is the 1 hour
They
market structure level.
respected the structure and drop.
This is the 1 hour market
Yes.
structure level, right?
Yes.
Good. This
Yes.
particular point here. So what happened? This point
Yes.
now, this point now should be your area of concentration if you still want to sell. This market structure level in 1 hour should be your point where you are looking towards to join the sell target.
Yeah.
Now, if you go down to the 15 minutes,
To
which is now
join
the
the
entry
sell.
time frame. Let's come down to the 15 minutes.
Yeah.
Come in. Let's come back to the 15 minutes. All right, 15 minutes is not showing. Sorry for that. The history is not up to that level. But let's continue. This is the 15 minutes. Now, if you go down to the 15 minutes, rather, you are going to notice what? You are going to notice the what? The formation in this point. You are going to notice the formation in this point where they change their hand and they keep dropping price. Are you seeing it now?
Yes, sir.
They did not break market structure at all, and they keep dropping price. All right, that is it. Now, if you look at the effectiveness of the average bar, now look at the average bar. The average bar, what you want to do is this. When you see the average bar, I'm coming, let me make this thing bold. When you see this, all right, now when you see this, the next thing you want to do is this. Come over to the average bar and put the eye. Look at the eye, the highest level of the average bar. Look at, I make use of the eye. Look at the upper shadow, not the close, rather, or I did not make use of the close of the average bar, neither did I make use of the low, but I'm making use of the eye. Look at it, the eye, this point. I put my level there. My eye. Can you see that price is not close above that high?
Yeah.
Can you see?
Yes. Yes.
Some point it might, if the thing is too strong, it might stretch, but it will not close around this place. It will not close here. So it is around this eye you want to be looking for your what? Your ABC formation. Then price will now keep dropping. Continue the trend. Do you get it?
Sorry, sir. In this case, sir, where exactly do we enter the trade?
Good. Where you enter the trade, I told you, is from the 15 minutes time frame, which is your entry time frame from 1 hour. Why? We couldn't get back to the 15 minutes because the history. So what I'm saying is when you come to the one,
assuming we have something like this there.
Assuming you have something like this. Hello, engineer. Assuming we have something like this, what? I can't get you. Engineer, are you there?
Please on first.
I guess.
Sorry, somebody call came in.
Okay.
A call came in.
Assuming you have what?
Assume.
I can't hear you. Assuming what?
In the 15 minutes.
Assuming we have what in the 15 minutes?
Assuming our 15 minute structure is just like what we have here.
Your 15
How do we determine
your 15 minute structure cannot be like this. Do you know why?
I know. It's going to give us a kind of pin, a rejection pin.
Good. It's
to
going
change
15,
their hands.
15 minutes is not going to be like this. Why? Because it's 15 minutes candle time frame. So price is going to form at every 15 minutes. At this point now, if you go to the 15 minutes time frame, you might see another block in the 15 minutes time frame. So 15 minutes is going to form a particular market structure. Now, let me now give you another answer to that. The first one is correct. Now, the second answer is this. Look at how this is straight, right? This is straight, right? In 1 hour.
Yeah.
They now form their market structure here, then drop. Right? This is the first market structure of 1 hour, right?
Yeah.
So this is daily.
This is the first, oh, sorry, of daily, right? Thank you, Naomi. If this happened to be the 15 minutes time frame, they will also do the same thing here. They are going to, first of all, form a market structure level because they need the market structure level to continue to push price downward. If there's no market structure level at this point, then price can shoot up. But since this is the highest high they've gotten to, since this is the highest high they've gotten to, since this is the highest high they've gotten to, they were going to look for a place, maybe around this point or around this point, to form market structure, to break price into bits, because they know that they are going to move with what? Market structure, in the sense that they are not going to close above this one, and they will not drop. You get the point now, engineer?
Yes.
I'm still confused. So sorry, before the time reach my turn.
Congratulations, because already it's your
After
turn.
marking
Hello,
out
don't use somebody's question to answer your own, to do your confusion. Come
Sorry,
and clear
sir.
your
Can we
confusion.
take it this way?
Okay.
Can we take it this way, sir?
Okay,
Maybe we look at a particular structure from the monthly, so that we can get the real entry point in the 1 hour.
I have given you the rate, and okay, you need it from the monthly time frame so that I can get it from the 1 hour.
So that we from 1 hour,
right.
We can't get the 15 minutes chart.
All right, now let's do this one here. I pray the 1 hour will show for here. Let me see. Control B. I don't know why this thing is not loading, but I'm actually doing my chart. It's not loading. It's not actually loading.
Okay.
This is it. It's actually no green load. No green load. I don't know what we're going to do. Maybe let's set from weekly, so that we can see anyone from the weekly time frame. Weekly 2/7, no green load. That's why I wanted to use the daily. Do we have any wanted? We don't have here. This is a perfect example. And 1 hour is not loading. It didn't load, but okay, let me see if I can actually reduce it. Maybe it's because of I did not. All right, let me see if this can, whether we can see this tiny point, because this is going to be the entry point in 1 hour level. All right, we have it. Engineer, are you there?
Yes.
Now let's answer your question. Now, engineer, look at it from this particular point. Look at it from this particular point. Price drop, come down to touch the moving average level. This is the first bar that touches the moving average level. Now I'm going to, that's our average rejection bar. I'm now going to put our, look at it, this thing around the eye of that particular bar to tell you that this is the area where price is likely to form the market structure on the daily, because daily is the primary time frame. So look at this particular drop now.
Yes, sir.
Look at this particular drop the market did. Look at this particular drop the market did. Yeah. If you now go to the daily, you will notice that daily already formed a market structure level around this point. Are you seeing the daily market structure level?
Good. It is.
Can you see that daily already formed market structure level? as it was dropping.
Yeah.
Can you see?
Yeah.
Can you see? Now, it was at this
Sorry.
point that
Sorry.
Naomi, I can hear you.
My brother was talking. My brother was distracted.
Oh, your mother was
Sorry.
distracting
Actually,
you.
you drew
Chai.
this thing from. Sorry. Actually, you drew this boss from monthly time frame.
Yes.
Yeah.
Okay, started from monthly,
Yes.
Yes.
then
Yes.
you
Yes.
daily.
Yes.
Okay.
Daily.
Good. Now, if you notice, the daily time frame is price is following the daily time frame moving average, market structure rather. It came to this
Yeah.
point. This is the point where it touches the what? The
Yeah.
moving average level. Now, what happened? The market structure levels are still intact. This is it. Now, this is not the key market structure level. Now, this point now mark our high of that average bar. And what did price do? Price came back down, then go back up here. Now, remember it touches our moving average. And since we already have our average rejection bar, we now know that what? It needs to break daily market structure. That means, which is this particular point. In short, which is this particular point. Let us be clear here. I want us to see something. I guess there's a break already in market structure. Good. There's a break here in market structure. Look at it. Drop down, this, then it went up. There's a break in market structure here.
Yeah.
Can you see? Can you see?
Yeah.
But what happened? Because the market has not closed for the month, what did it do? We have to come down to the 1 hour time frame. That was why Naomi, when we were trading BTC, something like this came up. He said it has already break market structure. I said, no, wait for the end. Wait for the end of that bar, the close of the week. And what happened before the week closes? BTC retraces back